And now let's shift focus to markets. South Korea marked its worst trading session on Tuesday since March. The Korean stock benchmark KOSPI plunged 10%, tripping a circuit breaker that marked the 13th sell-side trading halt this year. While South Korean stocks have recovered from the deep rout earlier this week, the questions remain. On Tuesday, Samsung Electronics fell more than 7%, while SK Hynix dropped over 10%. Traders called it Black Tuesday. The market rout was sparked by a tax reform. Lawmakers from the ruling Democratic Party, the Progressive Party, the Rebuilding Korea Party and the Social Democratic Party floated taxing unrealized gains on stocks and real estate as income before any asset is sold. Currently, Korean investors only pay tax when they actually sell and lock in profit. This proposal breaks that link entirely. This isn't a one-off proposal. In February, lawmakers floated cutting the real estate capital gains exemption threshold from 1.2 billion to 8 million won, or from nearly $800,000 to about $600,000. In April, they targeted long-term holding deductions. Tuesday marks the first time the push has explicitly reached stock markets. President Lee Jae-myung previously reversed a plan in September 2025 to cut the capital gains tax threshold. That's after a retail investor backlash wiped out billions in market value in a single week. Seoul has tried this fight before, but has backed down repeatedly after a backlash. There's also a fresh global precedent working against this proposal. The Netherlands enacted a flat 36% annual tax on unrealized gains across stock bonds and crypto on February 12th. The backlash to that move was swift, and Dutch officials gutted the unrealized gains portion within 2 weeks. For South Korea, the tax forum looks more like the spark than the whole fire. Strategists pointed to SK Hynix valuation overtaking Samsung as a sign that the rally was already overheated. Adding to that was Fed rate hike bets strengthening the dollar and a broader Asian sell-off. The real test now is whether the Democratic Party reads this sell-off as 2025 repeating or pushes ahead regardless.